I do believe that my most optimistic model is looking for gold to test $2,700 by the end of this year, first quarter of next year. Typically, if we're looking at an Elliott wave count, one is very difficult to ascertain in terms of where it's going to move to. It's called a benchmark wave. But once one is in place, then we use that to ascertain what wave 3 and 5 will do. And what I've done is basically a 1.618 extension of the move that we saw in wave 1 to wave 3, and that would take gold to about $2,700. And I think that that is very optimistic. It's very bullish.
The NASDAQ experienced a significant drop of 3% on Wednesday, marking its largest single-day decline since 2022. In contrast, small-cap stocks have been rallying since the start of the week. The Japanese yen has strengthened against the US dollar, rebounding from a 40-year low. The precious metal reached a new all-time high on Tuesday at $2,470 as the dollar faces continued downside pressure. The momentum has attempted to continue building on the upside on Wednesday, but the move has encountered some resistance around $2,480, though they have since pulled back slightly from their peak. What's next for gold prices remains to be seen. Gold prices are expected to climb to $2,500 by the end of 2024, according to J.P. Morgan research estimates. GaryWagner, editor of thegoldforecast.com, discusses the drivers behind gold's latest run to new all-time highs. His most optimistic model predicts that gold could test $2,700 by the end of this year or the first quarter of next year. Over the next 6 to 12 months, Citi expects gold to rise $2,700, $3,000 per ounce. Among wealthy investors under the age of 43, 45% own gold as a physical asset, and another 45% are interested in holding it, according to a recent study by Bank of America Private Bank. India and China's insatiable appetite for gold has garnered considerable attention this year. Traditionally, India, the world's second-largest gold-consuming nation just behind China, is fairly sensitive to the price of gold, meaning that demand tends to drop off as prices rise. Wagner notes that we are witnessing history in the making with gold. He believes that as long as gold doesn't fall below $2,400, it remains exceedingly bullish. If it corrects to $2,420, he anticipates it will then resume rallying, potentially challenging $2,500 per ounce. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
It's exciting. If you think about it, since April of this year, we have actually hit 3 record closing days or sessions. The first one was at 34, 35. The second one was 60. And this most recent one took us really to some real nice highs at around 88 in terms of an intraday high and about 75 in terms of a close. So it's been most interesting. We're witnessing history as we speak. We're looking at a daily candlestick chart of gold. And if it starts really about the middle of February when gold was sitting at around 2,000, and then you can see where my pointer is right now. In the middle of April, it hit the first of 3 all-time record closes. This one coming in at roughly 39. It then retraces and then moves to the second of, and the market's moving so fast, the second occurrence. And this one came in at 2460. It then retraces back down to about 2300. And then this last rally is really from 2300 up to 2488. And what you see is a basic Fibonacci retracement of the data set from 23 to 2488. Now, gold right now has sold off for 2 days, and that's these red candles here. And it's very close to a 23.6% Fib retracement. That's an acceptable but shallow correction. A deeper correction would be the 38.2% Fib retracement. That comes in at around 2420. And my sense is, all things being equal, if gold continues to decline, we're getting a correction here. And I believe that this, as long as it doesn't fall out of bed, meaning break below 2400, I believe that it's still exceedingly bullish, because we had a tremendous move of $188 from 2300 to 2488. If it comes down to 2420, it will then recycle and move back into a rally mode, which has to, if we're looking at gold trading with higher highs and higher lows, which is what we've seen recently, then we would expect gold to trade much higher and actually challenge 2,500 per ounce. I believe that once we hit the first record high back in May, we had a pretty deep correction from about 2,480 down to 2,300, so about $180 correction. We then saw this double bottom about 2.5 weeks apart, and then a move back up and beyond that, which tells me that even if gold corrects here and moves back to, say, as I said, 2,420, I believe that it will then enter a bullish rally cycle, taking it back to challenge 2,500. Now, in terms of optimistic, but this is assuming that what we're witnessing with this recent high near 2,500, if we have a correction that goes to about 2,420, it's a 38.2% fib retracement. Typically, if we're looking at an Elliott wave count, one is very difficult to ascertain in terms of where it's going to move to. It's called a benchmark wave. But once one is in place, then we use that to ascertain what wave 3 and 5 will do. And what I've done is basically a 1.618 extension of the move that we saw in wave 1 to wave 3, and that would take gold to about $2,700. And I think that that is very optimistic. It's very bullish.
Economic and geopolitical uncertainty tend to be positive drivers for gold due to its safe haven status and ability to remain a reliable store of value. It has a low correlation with other asset classes, so it can act as insurance during falling markets and times of geopolitical stress. Gold's blistering rally this year was partly fueled by expectations the Federal Reserve, Fed, would cut interest rates as many as 3 times in 2024 as stubborn inflation started to ease. Next is the weakness of the U.S. dollar. The U.S. dollar index, which measures the strength of the dollar against a basket of foreign currencies, has slightly decreased recently, making gold more attractive to foreign investors. Wagner expects the trend for gold to be higher due to a likely period of dollar weakness. He points out the inverse relationship between gold and the dollar, suggesting that a weakening dollar will push gold prices up. As long as gold stays above $2,400 per ounce, a previous resistance level that has now become support, Wagner remains exceedingly bullish. Let's now turn our attention to the video again.
It would go higher from here under the assumption, first we have political uncertainty, we have geopolitical uncertainty, and we've got a very, very strong possibility that there's going to be, whether it's political or geopolitical issues that come up in the future. So why would gold continue to go up? I think it's because market participants have been waiting so long for interest rate normalization. We're getting gold reacting to lower moves in inflation rather than higher moves. And I think that the trend is higher because what we're going to see is the dollar weaken. I think that that's going to be a big component, is that we could have a extended period of time of dollar weakness. And of course, there's an inverse relationship between gold moving up and the dollar moving down. If the Fed actually does cut rates in September, which most analysts believe is a high level of probability, then that's signaling a series of cuts. I believe that we'll see 2 rate cuts this year. And with each rate cut, we're getting that upward momentum in gold. What is happening is, one, you still have central banks continuing to buy at record levels, okay? You have different hedge funds as well as speculative funds entering into the market. So you've got a lot of activity by central banks and by large institutional traders kind of jumping on the bandwagon, creating that upward momentum. And when you have that much volume kind of weighted to the buy side, it's going to move gold prices higher. Well, it would have to break below $2,400 per ounce. $2,400 was resistance up until just recently. Once it broke above that price point, it really shot up over the period of about the last week in trading. And from that point, resistance became support. And so as long as that support level holds, I would be exceedingly bullish. And the only real target is to take out the previous all-time record close, which came in at about 24.60, and the all-time intraday high, which was 24.88. So that's what, $12 away from 2,500. It's not that far. And I don't think that it is a big stretch to look for gold to at least challenge 2,500. Now, if gold challenges it the way it challenged 2,400, we would expect to see a couple moves above it, only to fail. In other words, it would trade, maybe go to 25.10, 25.12, and then come back down, maybe challenge it again. In the case of 2,400, it took 3 attempts before 2,400 became support rather than resistance.
Gold has been a store of value for thousands of years. Unlike paper currency or other assets, gold maintains its worth over long periods, allowing wealth to be preserved and passed down through generations. Although gold prices reached record highs in July 2024, the future will depend largely on global economic developments and monetary policies. With geopolitical tensions, expected interest rate cuts, inflation, and central bank buying in focus, what is the gold price forecast for 2024 and beyond? Will gold prices hit another all-time high? We want to hear from you. Feel free to leave your thoughts in the comments. Give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.